What's up, YouTube? Welcome back to another video. Now in this video we're going to be dropping gems on entries and how to catch precise entries, how to make those precise entries and get those sniper entries that you see everyone on YouTube be going. You have the 1 to 50 RR, 1 to 100 RR, the wick entries and things of that nature that you see all the time on YouTube. You see all these Forex traders catch. All right, so we're going to be talking about that. We're going to drop some gems on entries. Okay, so we're going to jump right into it. This is a trade that we can look at itself and see this is right here would be considered a precise entry. You see this wick, you see our entry. The entry is 4 pips. So this is the type of entries that you want to catch, these precise, low stop loss wick entries. All right, so talking about it, how do we go about catching these entries and what do we do? All right, so looking at this little scenario right here, we have a bullish scenario. Okay, we're going to be talking about 2 types of traders, 2 types of smart money traders, and how usually smart money traders attack the markets and using order blocks and sponsored candles and things of that nature, and how they usually go about this. All right, so let's say this is our order block here that we're looking for entry from. Okay, usually what you'll have the typical smart money trader do is mark out this order block, and what they usually do is just set an entry on the open of the order block, or they'll set an entry on the 50% of the order block. And yes, there's nothing wrong with that, but when you're talking about precise entries, there's more things that go into it. All right, so you have the open or the 50%, and that'll usually be their entry on that order block alone. Now, I'm not saying that's not a precise entry. That is, compared to how support and resistance is, and trend line and things like that. This is more precise, but you can get even more in depth with it. So I believe this is where people kind of lack when it comes to catching these sniper entries, and where they don't really kind of tune in and focus on this, and that is Wyckoff. Right, Wyckoff shows us the evidence of buyers and sellers. Okay, as simple as that. Wyckoff accumulation shows us the evidence of buyers getting into the market. Wyckoff distribution shows us the evidence of sellers getting into the market. So what we would do is we'll wait for the market to trade inside of this point of interest. Now I have 4 different types of entries, criteria that I look for. I have 4 different kinds of entries that I look for as my lower time frame entry to catch this precise entry. I'm going to share one of them right now, which is the regular accumulation. The regular accumulation usually looks like this. You have the market move down, you have the market create 3 drives towards the downside right here with the break of structure. All right, you see 1, 2, 3 drives here with the break of structure. Once we get this break of structure, you'll usually see an order block inside of here that we take our entry off of. All right, so now this will become our entry here. Moved that on accident. But this will become our entry here instead of this whole area. Okay, and usually this will be way smaller stop loss than what is showing here. Okay, but that is the case right there. That is the entry criteria. That's one of the entry criteria that we look for when we're taking these lower time frame entries. And this is how you catch precise entries, these wick entries. This is how you get them. All right, so we can go over examples right now, but this isn't a bullish scenario. A bearish scenario is the same exact way. All right, instead you'll be looking for distribution. But if you want to catch these precise entries, you have to understand the Wyckoff. You don't have to understand everything. You don't have to understand every letter of Wyckoff or whatever the case may be. You just have to understand the pattern and why Wyckoff happens. Once you understand that, you can refine your entries even deeper to another level, right? Because Wyckoff happens on the second time frames as well. You can be getting 2 pip stop losses, 3 pip stop losses, trust me. So I did cover this trade by itself in a video, so I'm not going to get too deep into it, but you can see one of my entry criteria that I just covered. This is in a sell scenario though. My entry criteria that I just covered, you have 1, 2, 3 drives, break of structure. What do we look for now? We look for the order block that needs to be mitigated. All right, and that is our entry right here. Okay, simple as that. Now if I get even deeper into it, you can see we have another entry inside of this entire move. So let's zoom in a little bit more. You have what? 1, 2, 3 drives, break of structure here. And now what you could have done was you could have taken this order block here, or you could have zoned out this entire move and took the 50%, because when you're looking at Wyckoff, if this is a valid Wyckoff schematic, we should never go above this last drive. All right, this last drive, which is our UTAD, we should never go above it. Once we create this last drive and we break structure, if this is going to be a valid schematic, we should never go above this. So your stop loss can be safely above this. Now, knowing if you go above this, then this is not a valid schematic and the market is probably going to continue towards the upside. But this is one entry right here that you could have caught. Now, I didn't catch this entry. I caught the second entry off of this order block, off of the higher time frame schematic. All right, so looking back from like 2 weeks ago, EU again, and we're going to draw the picture on this trade, and we're going to show you the two different types of entries you could have took. You have the more broader entry, then you have the more precise entry, and you're going to see the same criteria, and the market looks exactly the same on how we take that entry. All right, so let's draw the picture real quick. We have a drive towards the downside, right? We have this high, which creates this low. All right, now for my students in the Discord, for my students in the academy, we know that this is only a slingshot down. This is a continuation move. This is not our point of interest. Well, it is a point of interest, but this is not our main point of interest. This is not the origin. All right, so this right here is our origin. This drive towards the upside here is our origin, right? So meaning if the market does not react off of this, this is where we're expecting the market to come. Now, there's two ways you could have done this, okay? You could have either took the 50% of this candle, well, this order block here. So essentially, boom, let me go ahead and move this down a little bit more, and we will draw this to the 50%. Here you go. You have a 12 pip stop loss. Right now, many of you would say that is a precise entry, which it is, but you can get even more deeper into it and you can scale it down even more. All right, so scaling into the 2-minute time frame, let's observe what happened. All right, so just looking from here, what do we have here? We have the same entry criteria that we usually look for on lower time frame. We have these drives towards the upside. We have one drive right here, we have a second drive here, and we have our third drive. We expect this third drive to break structure, which we did. So this right here tells me that we have some sort of distribution going on and the market wants to sell to the downside, right? So put that into perspective. This right here would have been your entry, your quote unquote precise entry. But just look at lower time frame and see how more in tune and how we could really get into the market and see how we could catch these precise entries, even more precise than what we got here. So we're just scaling in more and more and more. All right, so just looking at it, right, we have our distribution here. We have a drive towards the upside, mitigating this whole area here, right? Boom. So essentially where your entry comes in is when we break this low here. We have a break of structure, just barely. And look, what do we have? Unmitigated candle. Boom, entry there, wrong one. Entry there, your stop loss is going to be above this high. Let's see here. Boom. Entry is above this high. One tip I will give you when you're on these lower time frames, understand that you're having a 3 pip stop loss. So sometimes you could be a little bit lenient with your stop loss, and let's say you have a 3 pip stop loss, let's say you put a stop loss or two above this high, because understand that you're on a lower time frame. This gives you more leverage on your trade. This gives you the opportunity to put a little bit more stop loss according to the spread and to adjust yourself a little bit so you can be comfortable. Now, you don't always have to take, like, you know, this 3 pip stop loss. If you wanted to, you could have took a 4 pip or a 5 pip just to be more cautious on the trade, just so, you know, something like this don't happen, because manipulation can take you out of the trade. But in this case, you wouldn't have gotten stopped out just by being above this high, right? But let's say you were being a little bit more lenient and you wanted to take a 4 pip. All right, you could have done that as well, but we're just going to keep it on where it was and at this high, which you didn't get stopped out at. And just look at this precise entry. Wouldn't you call this more of a precise entry than this is? Just look at the RR as well, targeting this low, because understand that we were bearish in this scenario, and that's a 1 to 33. Okay, a 1 to 33 easy trade right there. Just being precise. Okay, so this is what I wanted to cover. I tried to keep it as simple as possible. I hope you guys enjoyed this video. Subscribe, like the video. Let me know what other gems you guys would like me to drop. Write any videos, any recommendations. Let me know. And I'll see you guys in the next video. Peace out. Do not forget to take advantage of the ZSNIPES ebook. We have a simplified strategy there. If you want to join the academy, you can check all the links in the description. You can contact me on Instagram, Telegram, right? Discord, whatever the case, wherever you can find me. All right, so I'll see you guys in the next video. Peace out.